Hello everyone, welcome to EduTap and welcome to today's session. So today we are going to discuss two very important notifications that has been released by the Reserve Bank of India. The first notification is regarding the enhancement that has happened in the guidelines of TREDS platform, which is very important for us to understand because it was in news in February also, and again this is in news, okay? So we are going to understand about the TREDS platform and the enhancements that has been done. The second news article is regarding the yearly data that has been released by the Reserve Bank of India for the deposits with the scheduled commercial banks. So what is this data as well as why this is so important? We are going to understand that, okay? So before starting with these two very important notifications, there is a big announcement from EduTap that we have brought for you the comprehensive guide for RBI, NABARD and SEBI, so that through a single guidebook you can get all your common queries answered. Okay, in this guidebook you are getting the complete syllabus for the examination, you are getting the sources for your preparation from where you have to prepare, as well as you are also getting the previous year questions for your practice, for your understanding. And this is made absolutely free of cost to save your time, to save your efforts, and you can easily download these guidebooks. The link is provided in the description box below. So do download these guidebooks. They are going to help you a lot in your preparation. Now coming to the news article that is regarding the RBI opens TREDS for all players in factoring. So what has happened that in Feb 2023, the RBI, the Monetary Policy Committee meeting was held, okay? And after this meeting, the statement on developmental and regulatory policies document was released, okay? Now, as per this document, in this document, the RBI had discussed that the RBI will make enhancements to the TREDS guidelines. And in June 2023, the RBI has made the enhancement, has brought out the enhancements that the RBI promised in Feb. Okay, so what are these enhancements that has happened in the TREDS guidelines that we are going to understand? But before that, let's have the brief understanding of the TREDS platform. So see, TREDS platform is the trade receivables discounting system. Okay, so TREDS is the trade receivables discounting system. It is an electronic platform through which the trade receivables are discounted. So what does this mean? Okay, so let's say the MSMEs are the sellers and they are selling the product, some product, okay, to a public sector undertaking or to a government organization, to a government department. Now the MSME has sold 5 lakh worth of goods to the public sector undertaking, but the public sector undertaking is not able to pay right now. The public sector undertaking will pay after 3 months because the sanctions have to be made, the funds have to be released. So for that, the public sector undertaking is saying to the MSMEs that we are able to pay you after 3 months. But the MSMEs are very small sellers. They need the funds with themselves so that they can continue their production process. So the MSMEs, but they also have to do business, and the public sector undertakings are the big undertakings, and the MSME do not want to lose the business. So the MSMEs are selling the goods to the public sector undertaking and raising the bill of 5 lakh. After the 3 months, the MSME will get this much money. So the supplier supplies the goods and services, and the supplier goes on the TREDS platform, that is the Trade Receivables Discounting System platform. Supplier logs in the TREDS and uploads the invoice for the receivables. So this is the trade receivables. Trade receivables means the trade that has been done, for against that the receivable that is there. So the trade receivable is actually the 5 lakh rupees for the MSME. So the supplier logs in the TREDS platform and uploads the invoice for the receivables. Okay, so the invoice has been uploaded of the receivable on the TREDS platform. Now this invoice is converted into the factoring unit. Factoring unit is a document kind of thing where all the information is present, that is regarding the time that when the money will be paid by the buyer, how much money, the amount that is there, as well as the account details of the MSME, the account details of the buyer, and the timeline that is provided to the buyer, and all the details are provided in this factoring unit. So the invoice is converted into the factoring unit. The invoice only had the information regarding the transfer that has happened and the money that has to be paid, as well as the date on which the money has to be paid, okay? But in the factoring unit, the account details are also mentioned. So the factoring unit is complete document regarding the complete process, okay, of the invoice. Now this factoring unit will be used for the bidding. So first of all, the buyer verifies and approves the invoice that yes, this is the amount, this is the date, and the details are correct. So the buyer verifies and approves the invoice. Now the financiers have got this factoring unit. The financiers have got to know the information that okay, this is the buyer, this is the seller, this is the amount, this is the date, these are the account details. So the financiers bid against the factoring unit that the invoice or the factoring unit is of 5 lakh. So the financier is bidding that I will pay 4,80,000. The other financier is saying I will pay 4,85,000. The other financier is saying I will pay 4,90,000. So the bidding happens. Supplier accepts the most favorable bid, which is 4,90,000 here. Okay. So this is the favorable bid that is accepted by the seller. Now by the seller. So after the seller accepts the bid, the amount, so this financier, let's say financier 3 has given this bid, so the money will be taken out of the financier account and it will be paid to the seller. So the money will be paid, the settlement will happen, the settlement instruction will be sent through the TREDS platform, and this settlement is also happening in the TREDS platform only. Okay, you do not have to go out of the TREDS platform to do the settlement. It's not like that the financier is meeting with the MSME to do the settlement. No, the settlement will happen on the TREDS platform only. So the settlement instructions are being sent and the financier is being debited, the financier account is being debited and the money is going to the MSME. So from the financier, the money will go to the MSME. The money is 4,90,000. Okay. This much money MSME will get. That's why it is known as the trade receivables discounting system, because the discounted value is given to the MSME because the MSME need the immediate fund. So for that the MSME has to pay something also. Okay, otherwise the MSME can wait for 3 months. After 3 months the MSME can get 5 lakh, but the MSME need immediate funds, and that's why some amount has to be paid by the MSME also. So the MSME is getting 4,90,000 immediately, and after 3 months the financier will get from the buyer 5 lakh. So the financier is making the profit of 10,000. You can understand here that the financier is making the profit of 10,000 and the MSME is getting the immediate fund. MSME does not have to wait for the 3 months. So it is a win-win kind of situation. So TREDS generates settlement instructions for debiting the buyer. So the buyer account will be debited and the financier will be paid 5 lakh after 3 months. Okay. So this is the whole process of TREDS, and TREDS is an electronic platform for facilitating the financing or the discounting that is happening of the trade receivables, of the bills, of the invoices of the MSMEs through multiple financiers. So there are multiple financiers that are present in the TREDS platform that do the bidding. These receivables can be due from the corporates. So corporates can be the buyers, the government departments, the public sector undertakings, they can be the buyers. Okay, so receivables can be due from any of these. The TREDS is an authorized payment system and is also be subject to the oversight of the Reserve Bank of India. Reserve Bank of India looks after the TREDS, and so the Reserve Bank of India has brought the enhancement for the TREDS. So this is under the Payment and Settlement System Act of 2007. I have made a complete session on TREDS. If you have understood the meaning of TREDS, that is good, but if you want in-depth analysis, you can see that session also. Okay, I have provided you the brief understanding of TREDS. Now, why TREDS was brought? It was for the MSMEs. TREDS is specially for the MSMEs because MSMEs are the ones that are in the liquidity crunch. They do not have huge capital like the big corporates. Okay, so to ease the constraints faced by the MSMEs in converting their trade receivables to liquid funds to have the immediate funds with themselves, they have provided the material, but they are not able to get the immediate funds. So to provide the MSMEs with the immediate funds, the Reserve Bank of India had brought the TREDS platform. It was the guidelines were released in December 2014, and then the updation of the guidelines happened in 2018, and now in June 2023 the RBI has further enhanced the TREDS platform. Okay, the guidelines allow the financing or discounting of the MSME receivables on without recourse. That is, if the buyer, see, the financier is paying to the MSMEs at a discounted value, and then the buyer has to pay to the financier after 3 months. But what if the buyer is not able to pay? The buyer is not paying after 3 months. So the loss will not have to be faced. The MSMEs will not be facing the loss. It will be the financier that will be facing the loss. So the financier has to choose very thoroughly that which kind of bills the financier is financing. Okay, so here you can understand that without recourse means that again the MSMEs will not be included in this transaction. So when the financier is paying the MSMEs, after that the financier has to get the money from the buyers after a certain period. So if the buyer is not paying, it will be the trouble that will be faced by the financier. Like the bank, it happens with the banks. The banks are giving the loans, loan is coming back, the borrower is returning or not, that is the trouble with the bank. Similarly, the financier has paid to the MSME. Now the buyer is paying or not, that is the trouble of the financier. Financiers are usually the big banks. They are the financiers are usually the banks. They are the NBFC, that is the NBFC that have got the factoring license from the Reserve Bank of India. So they have to bear the loss. Okay, so without recourse means they cannot say that MSME has to pay now. No. Basis by permitted financiers. Okay, currently 3 entities operate the TREDS platform. Now it is not the RBI that is operating the TREDS platform. The RBI is looking after the TREDS platform, but there are the banks. So RBI is regulating the banks, but the banks are run by some groups. Okay, the shareholders. The TREDS, similarly, the RBI is looking after TREDS. It is making rule for TREDS, but the TREDS platform is being operated by the TREDS operators. Okay, so there are the 3 operators that have got the complete license from the RBI. It is the Invoice Mart, RXIL, and the M1 Exchange. So these are the 3 operators that have got the license from the RBI. The RXIL, I guess it got the license in 2016. Okay, one more entity has also been given the in principle authorization. So now coming to the changes that has been brought in the TREDS. So based on the experience that has been gained, as well as based on the statement on developmental and regulatory policies that was released in February 2023, it has been decided to make the following enhancements to the TREDS guidelines. So the first enhancement that has been made is in regards to facilitating the insurance for the transactions. So what was happening, that as I have told you, that if financiers are paying to the MSMEs and the financiers will be getting the money from the buyers after a certain period, but what if the buyer says no, that I am not able to pay, I have become bankrupt, I am not able to pay. So the financier have to bear the loss, and that's why the financiers are very picky when it comes to the financing the or discounting the bills, discounting the factoring units. So the financiers place their bids on the TREDS platforms, keeping in view the credit rating of the buyers, that the credit rating of the buyer is high or not, that is buyer is trustworthy or not. If the buyer is a public sector undertaking, if the buyer is a government department, then the financiers are quite sure that the money will come back. But if the credit rating of the buyer is low, that is usually in the case of the corporates that are the shady companies. Okay, so the financiers are not generally inclined, they are not inclined to bid for payables of low rated buyers of the corporates that are low rated. So in this case, many of the MSMEs are not able to get the discounting, are not able to get the funds from the TREDS platform. So to overcome this kind of problem, to overcome this, insurance facility is being permitted for the TREDS transactions, so the financiers can get the insurance. Okay, like we get the insurance that if we get into a car accident, so we get the insurance. So similarly, for the loss of the financiers can also have the insurance. Okay, which would aid the financiers to hedge their default risk, if they are if any of the buyer defaults, so the financiers can get a particular amount from the insurance companies. So this kind of insurance facility is said to be introduced in TREDS. So apart from MSME, so right now there are 3 participants in TREDS, that is the MSME sellers that are putting their invoices. There are the buyers that have to actually pay to the financiers. So the payment will happen, all the payments in the TREDS platform will happen through the TREDS platform only, through the NASH. So through the NASH system that we will understand. Okay, so the MSME sellers, the buyers, and the financiers, these are the 3 players, these are the 3 participants in the TREDS. Now there is the insurance companies that have become the 4th participants participant in the TREDS. So the fourth participant is insurance companies. In their business or operational rules, the TREDS platform operators may specify the stage at which insurance facility can be availed. That you want to avail the facility during the factoring unit, during the bidding process, or during the payment process. So at what stage you want to have the insurance facility, this has to be decided by the TREDS operators. Okay, they are looking after the whole TRED platform now. Premium for the insurance shall not be levied on the MSME seller. So it should not be the process that the premium that has to be paid for the insurance that has to be taken to the financier. The premium should not be levied on the MSME seller. Okay, the insurance is taken by the financier, so the premium should not be given by the MSME. Collection of premium related activities and the related activities could be enabled through the NASH system. So I've told you now that all the money that has been, like, the financier has to pay to the MSME, the buyer has to pay to the financier. So this is happening through the NASH system, that is a web based solution in which the high volume electronic transfers are happening. So through the NASH system, that is a web based solution, through this the corporates, government, the banks, as well as the financial institutions, they do the high volume electronic transfers for the interbank transactions and for other kind of transactions. The NASH system is used, and this is the system that was introduced by the NPCI. Okay. So the NASH system is used in the TREDS platform for all kind of transactions. So for the collection of premium, for the payment for the premium also, the NASH system can be used. That is a web-based solution. Based on the consent received from the financiers and insurance companies, TREDS platforms could facilitate automated processing of insurance claims, that as soon as the buyer says no for the payment, after 3 months the buyer is not paying to the financier, so automatically the processing of the insurance claims can start if the insurance company and the financier are approving this. Okay, and this will happen, the settlement will happen through the NASH system. As of now, the credit insurance should not be treated as credit risk mitigant to avail any prudential benefits. Okay, so after, in the case of credit risk, like the buyer is saying to get more time, so the more time should be given and the insurance claim will not happen till the actual default has happened. Okay, so the credit insurance, that is the insurance that is given to the financier, shall not be treated as credit risk mitigant, okay, to avail the extra benefits. Now coming to the second enhancement that has been done. So the first enhancement is to introduce the insurance companies in the TREDS platform. The second enhancement is to expand the pool of financiers. So till now, the banks, the NBFC that have got the factoring license or the factor license, they are allowed by the RBI to take part in the TREDS platform as the financiers. Okay, NBFC factor. So this whole process of discounting the bills, this is known as factoring business. Okay, so this comes under the factoring business category. So the TREDS transactions fall under the ambit of factoring business category, and the banks, NBFC factors that have got the factoring license from the RBI, as well as the other financial institutions that have been permitted by the RBI, they are allowed to take part in the TREDS platform as the financiers. Now it has been said that we want to increase the financiers in the TREDS platform. That's why under the Factoring Regulation Act 2011, that allows certain other entities and institutions, additional entities and institutions, to undertake factoring transactions. So these extra entities and institutions that are allowed to undertake the factoring transactions, they are now permitted to participate as financiers in the TREDS platform also. So through this, the financials will increase in the TREDS platform. There will be more competition, more MSMEs will be able to get the immediate cash. This would augment the availability of the financiers on the TREDS platform. The third enhancement that has been brought by the RBI is to enable the secondary market for the factoring units. So until now, what happens that the financiers are buying the factoring units, they are bidding for the factoring units, they are paying to the MSMEs, and then they are getting the money from the buyers. What if the buyer has said to pay after 1 year and the financier is in need of the money right now? So the financier is not able to sell this factoring unit, but now it has been said that the secondary market will be introduced in the TREDS platform, through which the financiers will be able to sell the factoring unit to the other financiers. Until now, only the MSMEs are able to provide the invoice that is converted into the factoring unit and then it is sold to the financier. Now the financier will be able to sell the factoring unit to other financier. So this is the secondary market. So the TREDS guidelines provide for the discounting or financing of the factoring unit to have a secondary market. So in the TREDS guidelines, it has provided for the secondary market, which is however not yet introduced in any of the platforms that are working under any of the operators. So given the experience that has been gained, TREDS platform operators now have to decide that they want to enable a secondary market for the transfer of the factoring unit to the from one financier to the other within the same TREDS platform or not. So if the secondary market opens, it will provide for the financiers will be at ease that okay, like I have bought some security. If I have to keep that security for 10-15 years, I will be worried that should I buy it, should I not. But if I know that after 1 month I can sell it to some other person, so I will be at ease that if it not works for me or if I need any kind of money, so I can sell this kind of security. So the secondary market provides a ease to the financier also. Such transfers, though, however, should be subject to the applicable provisions under the Reserve Bank of India for the eligibility of the eligibility of the secondary market. We can say that the transfer should happen or not. So it should be as per the provisions of the Reserve Bank of India, because this is a kind of loan that the financier is giving to the MSME, which the financier is able to receive the money from the buyer after a certain time. Okay. So I have told you about the operators RXIL, InvoiceMart and the M1 Exchange. They are the operators that have got the complete license from the RBI, and the RXIL was the first TREDS operator that started working in, that got the approval in 2016. Okay. So now coming to the fourth. So first we have done that okay, the insurance companies will be introduced. Second, we have done that the financiers pool will be increased, the financiers will be increased in the TREDS platform. Third, we have understood about the secondary market. The secondary market operators, they can introduce the secondary market. The guidelines has been provided for that. The fourth is settlement of FUs not discounted or financed. What happened that the financiers, they do not accept many of the units, factoring units. Okay, that is they do not want to provide the money for these invoices. So there are many MSMEs that are not able to get the funds in the TREDS platform because their invoices are not being accepted by the financiers. So on average, 17% of the factoring units that is uploaded on the TREDS platform are not discounted or financed. For such factoring units, the TREDS guidelines require the buyer and the MSME to settle outside the TREDS platform. That is, they are not able to settle through the NASH platform that is provided under the TREDS guidelines. Okay, so here the buyers and the MSMEs, they are sometimes like they are not able to pay, they are not able to utilize this easy system of payment. So to overcome the inconvenience that is caused to the MSME sellers and the buyers because they are not able to transact through the TREDS platform, that is easier transaction can happen through the TREDS platform. So now it has been said that the TREDS platform operators shall now be permitted to undertake the settlement of all the factoring units, even if the factoring units that are not being discounted. So that is, the financier is not paying to the MSME. In this case, directly after 3 months, the buyer have to pay to the MSME. So this kind of transaction can also happen through the TREDS platform. Okay. So until now, what was happening that the factoring unit that was accepted by the financier, so immediate payment will happen to the MSME, and after 3 months, after 6 months, the buyer will pay to the financier. So this kind of transaction was happening through the TREDS platform. But the buyer that was directly paying to the MSME, because this factoring unit is not accepted, no financier want to engage in this kind of factoring unit. So in this case, the buyer after 3 months will have to pay directly to the MSME. So this kind of transactions are also allowed in the TREDS platform now using the NASH mechanism. Okay, using the NASH mechanism, it will make the settlement easier for the buyers and the sellers. So the settlement of the factoring unit will happen even if the discounting is happening or not. Still, the NASH mechanism can be used by the buyer and the MSME. So timeline for the fund settlement shall be subject to the provisions of TREDS guidelines. Okay, so the timeline has to be provided by the buyer. that after this time I am going to pay to the MSME. Now coming to the last enhancement that has been done, that is of the display of bids. So TREDS platforms facilitate the transparent and competitive bidding by the financiers. I've told you na 4,80,000, 4,85,000, 4,90,000. So the bidding happens for buying a factoring unit, for buying a invoice, a bill. To make the process more transparent, the platforms may display details of bids placed for an factoring unit to other bidders, but the name of the bidder will not be revealed. Only the details will be revealed, that for how much money you are buying this factoring unit and such. So this complete directive is issued by the Reserve Bank of India under Section 10(2), read with Section 18 of the Payment and Settlement System Act 2007. So here you have to remember Section 18 of the Payment and Settlement System Act 2007. So this was the guidelines that was provided in February 2023, where RBI has said that we will be providing the insurance facility in TREDS. We will be providing for more financiers to participate in the TREDS platform, as well as we will be providing for the secondary market operations. So these three have been accepted, as well as the displaying of bids. So this is something extra that has been brought. And the settlement of the financial units that is not discounted or financed, that is between the buyer and MSME directly the transaction is happening, that can happen through the NASH through the NASH mechanism under the TREDS platform. So this is also something new that has been brought. So there are two extra points that the RBI has thought to bring in the June 2023. So other than these two, that is the settlement of the factoring units that is not discounted or financed through the NASH mechanism, as well as the display of bids. So these two also have been brought by the RBI, these two enhancements. Now coming to the deposits with scheduled commercial banks. So the RBI has released these data points. The highlighted ones, I have shown you this in the revision session that happened in June. But I wanted to show you that this is very important when the yearly data is released. So this you have to remember, that the deposits with the scheduled commercial banks grew by 10.2% during the financial year 23, that is 2022-23, as against 10% in financial year 22. So it is not a great percentage increase, but the growth you have to remember. Senior citizens contributed about 1/5 of the total deposits as at end of the financial year 23. The share of female senior citizens in total deposits with scheduled commercial banks stood at 7.2%. In this, contribution of female customers in total deposits increased to 20.5% in March 2023. So these are the quarterly data, okay? This is the yearly data. Here, the higher share of deposit amount was mobilized under the term deposit, that is 73.2% of the total deposit. 73.2% of the total deposit were the term deposits. And this is the yearly data, that is for financial year 23, as compared to 44.4% in the financial year 22. Okay, so the share of term deposits with original maturity of 1 year to less than 3 years soared up and stood at 64.2% as at end March 2023. So this is quarterly data, okay? Okay. So more than half of households deposits during the 2022-23 came from 5 states. So this is yearly data. Yearly data you have to remember. So this is yearly data, as well as here the yearly data is there. Here the yearly data is there. So the yearly data, try to read it, try to remember it. 5 states: Maharashtra, Uttar Pradesh, Delhi, Karnataka and West Bengal. So these are the 3 important points: deposit growth, as well as the states, as well as the term deposits, because they have the very high share. So the term deposits have a very high share in the total deposits. So this was all that was important from the exam point of view. You can read the data points. Now coming to the first question, you must know the full form of TREDS. Okay. Now coming to the second question, which is the fourth participant on TREDS? You have to tell that. Now coming to the last question, which of the following is not allowed as financiers in the TREDS platform? So you can tell that. Okay. So do subscribe to the YouTube channel and you will get the PDF in the Telegram channel of ours. So do join the Telegram channel. So thank you very much. If you have any query, you can mail us here or you can contact us through this number. Thank you very much, everyone.